Welcome to the Personal Finance Professional Podcast. I'm Christopher Sheffield, Communications Director for the Personal Finance Society. In this episode, I'll be talking to Dr. Matthew Connell. In this episode of the podcast, we're discussing the recent spring budget and the implications for the insurance and personal finance professions. I'm joined by Dr. Matthew Connell, Director of Policy and Public Affairs for the CII Group. Here's my conversation with Matt. Hi, Matt, and thanks for joining me on the podcast today.
Hi, Chris. Thanks for having me.
Well, we're recording this a couple of days after the spring budget, and I was wondering if in the first instance you could talk me through some of the main talking points that you heard on this particular budget occasion. What was it that really stood out for you?
Absolutely. Well, I guess the first thing that stood out was pretty much the first thing that the Chancellor said, which he was talking about what are we trying to achieve as a country, as an economy, and he said he wanted to see a high skills, high wage economy, which for a policy wonk like me was really interesting thing to hear and a really encouraging thing, because I think for a lot of my career, what we've heard from the Treasury isn't so much talking about high wages, certainly, and not necessarily always talking about high skills either. Often I think what the Treasury has wanted from the economy is a kind of commoditized, low cost, high productivity, stack 'em high, sell 'em cheap type economy. They've talked a lot about productivity. They've talked a lot about technology, sort of driving down the cost of all these irritating human beings who still have to take part in the economy. You know, if you can just automate everything and put everything on a sort of simple, commoditized DIY sort of platform, then everyone will get all the products they need very cheaply, and it will be a wonderful environment for consumers. And sometimes the Treasury has sort of forgotten that we work as well, and we want satisfaction from our work and to feel like we're doing something really important and useful.
Absolutely. So why would you think that change in tone came about on this particular occasion then?
Yeah, I think there's two things. I think first of all, there's a realization that in terms of sort of global competitiveness, and there are always going to be huge economies out there that do the low skill commoditized elements more and more effectively. And there's also, as we heard, with all the talk about AI earlier in the year, even Elon Musk sort of saying that maybe work wouldn't exist in future. We have to get used to not doing any work because the robots are going to be doing everything.
They'll never replace you and me, Matt, I'm sure.
No, there's always a place for us. They can't program a robot to tell us what to understand what it is exactly that we do. So that's falling at the first hurdle. But yeah, So I think, and also I think, the politics of Brexit sent a very significant message, I think, to Westminster and Whitehall and to politicians as a whole, which said, kind of the argument for Brexit was, stay in there and we can go on this conveyor belt still of increased growth, and people say, well, hang on a minute, what does that increased growth mean? Does it mean that I'm going to be better off? Does it mean that my children and grandchildren are going to be able to look forward to jobs with decent wages, or are we going to be scrabbling around just trying to produce everything at the lowest cost and not getting much out of it in terms of pay or satisfaction either? So I think it's partly an economic realization of, the advanced economies that compete best are the ones that have high skills, and also the ones that have the most satisfied electorate who are more likely to vote for people. Politicians are the ones that have this high skill economy as well.
Now, clearly, I mean, this is an election year, and you've written an article in the Journal about what we would potentially like to see in the manifestos from the parties going into the election, which who knows when that's going to be held, as Labour calling for it as soon as possible, and perhaps some suggestions it's going to be in the autumn. But with this particular budget, I mean, were there any surprises? There was a lot of talk in the run up to this budget. There was a lot of delivery of the briefing that happened in the days before. So, I mean, was there anything that stood out for you from an insurance or financial planning perspective that you weren't expected to hear? And of the things that you did hear, well, I mean, what are your main feelings about those elements?
Yeah, so I guess you're right. It's a budget that was quite constrained, and so it was the subtle things that you had to look out for. I think one element was obviously around the UK switching emphasis to investment in the UK rather than investment in capital markets generally, and obviously the new product to come out of it was more on the financial investment side rather than the insurance side, which was this new ISA allowance, 5,000 ISAs for the British ISA that's focused on British investments. And in a way, it kind of it was a story of going back to the 80s. So it's when ISAs were introduced, there was a rule that half the investment in the ISA had to be in British companies and institutions, and then of course, in the 90s, we joined the single market. So that rule changed and it said it had to be European Union investments. Half the investments had to be in European Union investments. And then in the 2000s, with Cool Britannia, we went into a world where the rules were completely taken away and you could invest in anything globally because we were part of a global economy. And now it's almost like back to the future, back to the 1980s. And we're sort of pumping up the jam, if you like, in old 80s style, in investing in British investments again. So I guess it shows that nothing's new. Everything goes in cycles. But for the insurance side, of course, that's underpinned by the Solvency II rules, which we're told is going to unleash £100 billion of investment into good British investments like roads and airports and things that are going to get the economy growing again, rather than necessarily all being tucked away in capital reserves to prop up the solvency of insurance companies, where maybe that's not the most efficient place for that money to be.
Do you get the sense that this could all change again when we get to an election? I mean, we talked about the fact that this is, there's only a matter of months until we get to that particular deadline where an election is to be held in the UK. Do you think that these things will stand the test of time and continue on, irrespective of which party becomes the party of government going forwards, or do you have a sense that perhaps some of these things could fall by the wayside in actual fact?
Yeah, I guess there's the Office of Budget Responsibility published a graph a little while ago talking about the fiscal burden in the UK. And one thing you notice is that the fiscal burden always plunges down just before an election, and it almost always springs up again after an election. But I suppose that has been evening out a bit. In the 70s, it was a sort of massive series of W's as but taxes got cut and then yanked up again. Since then, the graph has been going upwards, but more smoothly. So I suppose that shows that in some ways, things like the Office of Budget Responsibility are kind of putting a bit of a brake on politicians and stopping them from doing what they naturally want to do, which is to play to the electorate, especially just before an election. So I suppose there is a little bit more discipline. I think on things like the proposals they made on ISAs, there's a little bit of politics coming into it there. So, the one good thing about the ISA system is it's fairly simple. People know that there's a certain amount of money you can put in every year, and if you don't go over the limit, then you don't have to worry about any other rules and regulations, and investors like that. And I think introducing a bit of complexity that says you can put this much money into an ISA that invests in anything, and then this much into an ISA that's a British ISA, that introduces complexity, and it's harder for financial advisors to pick out what's the best recommendation, let alone for people who are trying to manage their investments on their own. So I think that one might fall by the wayside. You might have a new government coming in and saying, oh, well, this old government had two types of ISAs with two types of limit. We're going to make it much simpler than that, and we're going to combine the two together and just have one limit for ISAs as a whole. Of course, that doesn't mean that they're not going to then do something more complicated when they need to pull a rabbit out of the hat for a budget in future. So
Yes, absolutely.
it's not a party political point. It's politicians all around the piece.
Of course it is.
But I think this element of searching out for areas where we can put more investment into infrastructure. Both parties supported HS2, but the full HS2 plan isn't going to happen. So there is a real challenge to get the sort of infrastructure, the houses that people need, houses and flats and accommodation that people need built through the planning system to get transport improved. That is a major task for governments, and let's be honest, no parties of all colours haven't really delivered on that as much as they'd like to.
So big opportunity still in that space. But also, I wonder about the Mansion House reforms and the Edinburgh reforms that this government has been pursuing since Brexit. I mean, ISA clearly falls into that particular category, and they've been talking about doing this in order to support savers and open up new investment opportunities for individuals. But I mean, are those reforms now complete, do you think, from the Chancellor and the current Prime Minister's viewpoint, or is there more to come on that front? Are there things that you were expecting to be announced that haven't happened thus far?
Well, I think they've, to give them credit, they've taken advantage of a lot of low-hanging fruit. So there were some rules in EU directives that weren't helpful. For example, in the MiFID directive, a rule that you had to write, advisors had to write out to their clients when markets were falling to just remind them how much markets were falling, which encouraged people to sell at just the wrong time. And the Treasury's dealt with those rules. So I think there's been a lot of good stuff coming out of the Mansion House. And again, with the Solvency II changes, there's absolutely no doubt that governments listened to what the insurance and life assurance communities have been saying on those issues. I think there is still a bit of outstanding business. So, for example, there's the FCA are consulting at the moment on capital requirements for firms. I know both a lot of financial advice firms and also a lot of insurance brokers are unhappy that through the financial services compensation scheme they're subsidising investment firms that have gone bust and left a lot of liabilities to the FSCS and ultimately to both financial advisors and brokers who have had to stump up to subsidise that, and there are rules coming out on that to improve that. And there's a bit more leeway now for the regulator to improve those rules. Along the spirit of the Mansion House rules. Now that we've left the EU and we don't have to work within the straitjacket of EU law that doesn't change very quickly. So there's some unfinished business there. But I think the main one is around this, going back to this high skills economy, because financial services professionals have really blazed a trail in terms of high skills. We've got professional bodies, not just the Personal Finance Society and the Chartered Insurance Institute, but also for banking and investment, for accountants. And it's a massive community where I think crucially, individuals and employers come together to decide what are the relevant skills, what do we need in terms of technical skills, soft skills, and really producing qualifications and training that means something right across the sector. So again, very portable recognition of skills, and also a community for continuous improvement through continuing professional development. So I think the architecture of a high skills economy, the Chancellor mentioned that financial services was one area where the UK leads the world, and it's no coincidence that that's been an area that's been supported by professional bodies and helped to really helped itself towards a high skills economy. And I think there's unfinished business there as well, because professional bodies have to move on from sort of purely doing technical technical competence, which is perhaps what we focused on up until the 1990s, and moving on to softer skills and moving on to areas like diversity and inclusion, so that we ensure that all those skills aren't just the preserve of a club of white middle class men who are members of professional bodies, but move way beyond that. So yeah, in terms of the Mansion House speech, I think a lot of the low-hanging fruit in terms of Brexit and leaving the EU, that's been dealt with, but there's still a huge challenge in terms of maintaining that high skills sector and opening it out to everyone.
Absolutely. And you picked up on equality, diversity and inclusion there. And CII has, with 11 other professional bodies, put out a report recently commissioned through the Young Foundation, which has demonstrated the progress that's been made thus far, but also the challenges that continue to be there in terms of moving policies and these sectors forward in that particular space. So I definitely encourage listeners to go and seek out that report as well. I also wanted to ask you, Matt, about inheritance tax. So this is something that has been talked about now for at least 6 months, an expectation since the autumn statement that the Chancellor was going to do something with inheritance tax. He hasn't done something with inheritance tax. It almost feels as if he was spooked in some way from changing the thresholds or changing the rules. What do you think happened there?
Yeah, I guess this is such an emotive area, isn't it? Because I guess when you look at it in a sort of cold, logical way, the best time to pay tax is when you're dead. it's you know,
that's certainly one way to look at it. Yeah. Well, yes.
So it's you know, kind of with the way wealth has developed, you know, a lot of wealth is tied up in housing, and yeah, when people pass away, there's a huge amount of wealth there. You know, schools and hospitals cost money. Government's got to get wealth from somewhere. If it taxes labour, then there's disincentives for people to work. If it taxes capital, then capital can very easily move somewhere else. So in some ways, you know, it does make a lot of sense from a who if the government has to penalise someone, who's it going to penalise to focus on something like inheritance tax. But I guess the other elements are, number one, it's a hugely emotive area. People feel like their inheritance has been taken away from them by the government, and it's almost a betrayal of someone who's bereaved that the money they saved for all their life is being snatched by the taxman before it can get to the people they intended it for. So it's a hugely emotive area, and obviously, in 2017, you know, the areas about paying for long-term care that were also connected to you know, kind of when you pay for it and do you pay for it after you die, and the whole death tax label and things like that. So it can get very emotive very quickly, and I guess the Chancellor had that in mind. And also, I guess there's the element of, you know, IHT does raise money, but it doesn't raise nearly as much money as tax on labour and other taxes, sort of VAT and things like that. So if you're going to dodge something because IHT is smaller, that's a path of least resistance in terms of not taking on arguments you don't want to have.
Certainly at this critical point in time, I guess, that they see it. As we said, you know, a few months before an election, it is understandable that the Chancellor may make that decision for that particular reason. We're coming towards the end now, Matt. I want to ask you about AI, and then I'll, you know, give you an opportunity to expand on any other things that you think of interest. But we had this the AI Opportunity Forum that the Chancellor was talking about as well. Now, AI is there's a lot of conversation that's happening across insurance and financial planning, financial advice at the moment about how it can be adopted, how firms can make best use of it. Were there particular things that you looked at in terms of this particular budget, or more generally about AI, that you think, you know, are of the moment that perhaps we should be thinking about more carefully, or just more about?
Absolutely, yeah. So, and I guess the thing to bear in mind is in insurance in particular, AI is already here. It's not something that's going to happen. It's a science fiction type thing that's going to happen in the future. It's used in underwriting. It's used in claims, and it can be used, to do a lot of things that consumers desperately want us to do. So it can be used to speed up claims. It can be used to speed up applications for insurance. It can be used to take claims people away from routine tasks so they can focus more on customers who really need a face-to-face or a interactive relationship with a claims expert to get their difficult claim handled. So AI has massive opportunities for insurance, but obviously there's also elements of risk and good governance. So we've seen with underwriting, insurers already have obligations under the Equality Act, for example, to be able to explain their underwriting decisions. And so what we can't do is get so enthusiastic about AI that we implement it without the right kind of thinking going behind it, and crucially without being able to explain how the decisions get made, and how we test the fairness of decisions for different groups. So I guess the challenge is, and again, this goes back to the high skills economy. The more we automate, and the more we can take machines doing routine tasks, actually, unlike Elon Musk said that we're all going to be out of a job, actually, the more emphasis there is on people with high levels of skills to be able to design an architecture for AI that means that it's accountable, trackable, auditable, and then also once we've got those audit results, that we know what to do with them ethically in terms of ensuring that the systems are there to ensure fairness. So I guess the challenge is, how do you get the skills to a level that to let the technology do what it can do?
Absolutely. Well, look, we'll end up talking about AI a lot more over the coming months and years. I'm absolutely sure about that. I'm going to put you on the spot now, Matt. General election prediction timing. When do you think it's going to be called?
Yeah, no, that is a good one. I think, if I put myself in the government's shoes, they've gone through a difficult time. Nobody's going to deny that. It's absolutely true what the government says about the pandemic and the war in Ukraine would hit any government for six. And we've seen governments all over the world have a big dip in popularity as inflation went up, and I think there's an extent to which the government's going to be thinking, right, now we've put that behind us, inflation's going down, we've got these tax cuts for national insurance feeding in, let's give ourselves as much time as possible for a feel good factor to start to increase, and so that pushes things towards the winter. I guess the winter's a difficult time though. We often get headlines about flu and rising coronavirus and kind of the strain that the NHS is still under even after the pandemic. So my guess would be sometime in sort of early autumn. While people still have the nights are still reasonably bright and people aren't going to the election in the pitch dark, but long enough for a feel good factor to come in. So I guess October would be the month I'd spout out, based just on trying to put myself in the government's shoes.
Fabulous. All right. Well, time will tell, Matt. Thank you so much. Brilliant to talk to you about this, and thanks for your contributions as always.
Brilliant. Thanks, Chris.
Oh, that was brilliant, Matt. Thanks ever so much for all of those contributions as always. And great to hear you on this edition of the Personal Finance Professional podcast. I've been Christopher Shadforth. Thank you ever so much for listening. For more podcasts and useful links, visit pfb.thepfs.org/podcasts. Until next time, goodbye.